Welcome to this week's edition of the Elite Money Market Update. I'm your host, Kristen Oakley, and I'm joined in the studio by the CEO of Elite Retirement Group, Patrick Marcel. And Patrick, it's great to see you. We're going to get into all things retirement in a second, but I have to ask, how is Maverick the puppy? Our viewers want to know how the new puppy is doing.
So he really likes to snuggle.
Aww.
Whenever I'm trying to do my homework, he'll jump up on my lap and he'll lay right here.
Oh,
and
so sweet.
Yeah, well, he's growing on me. So
yeah.
It's getting better.
Well, I know you weren't sleeping for a while, right? So that was part of the issue. Oh, well, I'm glad things are going well on the home front, and I know you've prepared another great show for our viewers at home. We really are passionate about taking the topics that are in the headlines today and helping you make sense of it at home, especially things that are affecting today's modern retiree, and there's no shortage of such things. So today we're going to start off by talking about, we're hearing a lot in the news about a possible incoming recession. What are your thoughts on that out of the gate?
Well, it almost feels like it's coming next month, the month after. It just is one of those things that if you look at some of the technical data, it'll tell you that there's a recession coming. You know, we have the 2-year Treasury is at a higher rate than the 10-year Treasury. So that a lot of times indicates some sort of recession. Some people will say that we're in a new bull market. I mean, everybody's kind of all over the place. There's a lot of noise and a
lot of talk out there, right?
Yeah, and I think that there's some things that need to work out of the system yet. I think that we need to be cautiously optimistic. I know I started out the year saying I thought this year was going to be pretty good. I didn't think it was going to be fantastic. But I still feel it'll be pretty good. I think there's going to be some bumps along the way. Right now, when we look at where the markets are at, we're seeing that a lot of investors are pricing in the fact that they feel the recession will be hitting this summer, and the Fed will take action to cut rates. So we're actually seeing the markets, this is strange, go up because of that.
Right.
And it's a little bit odd. But it's very, very hard to predict. And what I really want to talk about today is I want to talk about what can you do at home to make sure that you're as prepared as you can be so you don't get caught in another downdraft if it does happen.
Yes, for sure.
And we just have to really be paying attention to things is the big part.
And being prepared, that's the key.
Yes.
We can only go with what we know. But I know that this is a huge part of what you do for folks when they come in and meet with you is you prepare for all the different scenarios. The Eagle Scout in you does that, right? And prepares for your retirement. So what are some of the key things that you're helping folks do to prepare in case we are facing this incoming recession?
One of the first things I think is critical to do is make sure that you have money at the bank or somewhere that you can get at easily as your emergency reserve fund. If we go into a recession or if the economy comes unglued, you don't want to be scrambling or having to borrow money with interest rates the way they are today. So if you don't have that emergency reserve fund, build that up. And some people say, well, Patrick, what's an emergency reserve fund or how much should I have? I get a lot of times. And generally speaking, what we want to see is between 6 and 12 months of income or what you need to pay bills, right? In the bank so that if something bad happens, you have that money to fall back on and you can use that money to pay bills or what have you. So I think that's a really great place to start. So if you haven't done that, that's probably your number one first step. And then for those of you that have money that's invested, you know what? Now is a really great time to step back and look and say, hey, am I taking too much risk? Is the risk that I'm taking appropriate for my age right now? It may have changed. You may right now feel like a completely different investor than you did 2 years ago or 3 years ago. So it's a really great time to look at it. And that's what we help folks with is we do an analysis for them of looking at the current positions and then just matching that up with what kind of risk taker they are. A lot of times folks will have employer-sponsored plans and there's not a ton of help out there. So a lot of folks that come to us, one of the things that we do that helps them out tremendously is we evaluate their 401k and we make sure the risk in their 401k aligns with their risk they're willing to take.
Right.
And there's a couple different ways we can do that, but it's really, that's a really important thing I think right now is to really look at your risk. Are you taking the appropriate amount of risk? And really to find that out, you need to have some way a professional to work with you to figure out like what is your risk ability. And it's not just maybe a questionnaire that says you're a moderate aggressive investor or moderate or conservative or whatever. It's more technical than that. It's more, you have to really look at the entire picture. And we use a tool for that called Riskalyze that actually can look at everything that you're doing. You take into consideration consideration your money in your emergency reserve fund, the 401ks, other investments. What do you have set aside? What's your retirement portfolio? What kind of risk are you taking?
Well, and what's so fascinating about the time that we're in now, for example, 2022, that was a huge wake-up call for a lot of people who thought they were invested more conservatively. And then we saw, not only did stocks go down, but bonds went down as well. And usually there's that inverse relationship, but that wasn't the case. And so people who thought that they were invested conservatively got that rude wake-up call that in fact they were not.
Yeah, and even using gold or precious metals as a hedge against inflation and or down markets usually works. It wasn't working.
No.
It was not good either way you look at it. Now this year's gold is starting to look and act a little more normal, I call it. It is actually,
whatever normal is in today's world, right?
The new normal, I guess,
Right.
we can call it. But we're starting to see some things return to form. When we look at, for example, one of our money markets that's through Charles Schwab is paying almost 4.5%, a little more than 4.5% right now. And that's something that you can move in and out of right away, real easy. And the only thing is that, they look at a 7-day yield, and when you think of, when they say 4.5 or 4.67 or whatever it happens to be, they're looking at that as a per annum rate. So that's what you would earn if that rate stayed the same for the entire year. And a lot of times, money markets, our money moves in and out, and we don't always hold on to it for that long. But hey, if you want to park some money short term, that's very easy to get at. That's a really great place to go. And then there's other tools. So the safer money, the money that's not in the market, has some really nice growth potential, not as much as what we'd see as inflation.
Sure, but
won't keep pace, but it's a lot better than it used to be. For like 20 years, you couldn't hardly get any interest at the bank on anything.
Right.
And that's why we now offer CDs for our clients as well, because we're seeing tremendous value in 3, 6, 9-month, 12-month CDs. They're really doing quite well, and it's a really nice option for our clients.
Yeah, for sure. Well, and there's the other issue where a lot of folks are probably concerned when they've heard on the news about what's been happening with the banks. But you and I both know that was a unique situation. Those banks were taking a lot of risk that, collapsed and whatnot. So what would you say to someone who's concerned about having their money in the bank and that safety, if you will?
Yeah, I think what we've learned is that with the most recent banking crisis, we'll call it, at least that's how I view it,
right,
is that they're seeing a lot more banks step up and just buy other banks. And that's how they're solving it. I think that realistically, nothing 100% is safe. Right.
Every investment has a risk of some sort,
it all has risks, different types of risks. It's as good as we can get from a safety standpoint. FDIC, those are things that really can help us be more conservative with our money and at least put it in a place where we aren't taking a big amount of risk. Government securities, all those things can really help. And it really is important that we look at all the options out there and we really evaluate, like I said, go back and look at the risk that you're taking and your current investments versus the risk that you're actually willing to take. Does it match up? And that's why we offer the complimentary plan. And that's why we sit down with folks and we say, hey, we're going to offer you a free complimentary plan that's giving written direction and analysis of where things are at. And it's not just us doing it. We're relying on certified financial planners on our team and also chartered financial analysts on our team to make sure that we're putting the very best plan together for you, and we're giving you recommendations that make sense and can really help make sure that you're in a good place for planning for retirement and or in retirement. And if you say, hey, you know what, I really want to make sure that I'm on track for retirement, or I think I need to really look at my risk again. And these guys say they can help me with my 401k. Give us a call at 833-856-1392. You can, of course, go to the QR code, just put it on your phone, scan it, it's right there at the bottom of the screen, and that'll take you to the site. You can schedule time to visit with us. We'd like to get to know you. We'd love to be able to help you out and help you figure out, are you really on track? Is this the right position for you to be in? And quite frankly, we're just probably not the same investor we were a couple years ago. A lot has changed. The last couple of years has felt like 10.
Yeah, for real. Well, there's been a lot to navigate, right? And I know you've been helping people do that so well. So Patrick, thank you. To our viewers at home, we are going to take a quick commercial break. So we encourage you, call the number at the bottom of your screen, 833-856-1392. This is simply an invitation to have a conversation with Patrick and the team at Elite Retirement Group to see how they can help you, how they can serve you. For no cost, no charge, no obligation, you will get that complimentary portfolio analysis, that written financial plan that you can walk away with and know exactly what you need to do to be prepared for retirement and for any possible incoming recession. We have so much more to cover about what's happening in today's economic climate and how you can be prepared. Stay with us.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to the Elite Money Market Update. I'm your host, Kristen Oakley, here with Patrick Marcel, CEO of Elite Retirement Group. We are talking today about a lot of the current economic issues that are affecting folks' retirement and how you can make sure that you are prepared to navigate them. So, Patrick, I want to reference back. We were talking earlier in the show about this incoming recession, and you made a good point that it seems like it keeps getting postponed, but it's still looming. It's still, I mean, there's just a lot going on. From your perspective, what are some of the things that are perpetuating and causing this incoming possible recession?
Well, I think there's a number of things that are possibly indicating this recession coming up. We talked a little bit about the treasuries, the 2-year relationship to the 10-year, and how it's what's called inverted right now, upside down. And that's usually an indicator. But I also did some additional research, and I wrote a couple things down because I wanted to make sure I got this right?
Go for it, I'm ready.
The data. So the CBO, you know, we talked about that, the Congressional Budget Office, it says that in 2022, there was less revenue than expected, and it was $339 billion less than they expected. That's a problem, because they're gonna have to find a way to be able to recapture that and to be able to generate more revenue. So revenue for the government's down. So what happens a lot of times when revenue's down? Taxes go up. If taxes go up, that usually is a good way to put us off kilter a little bit in the economy. Now, if we had a strong economy, no worries. And I don't think the economy is bad. I don't think it's real strong. I think it's kind of middle of the road, maybe teetering. You do something like that, it could push us into a recession, possibly.
Right.
But then there were some other things that really caught my eye. And this I wrote down because I want to make sure I got this right for sure, is that I read an article on U.S. News that they revised the job creation numbers. And we've been watching that. We've been looking at this white hot employment market, right? It's been fantastic. Well, the February and March numbers, they revised quite sharply down because we were looking at February 326,000 jobs, and they revised it down to 248,000. Now, that's quite a few jobs that didn't show up that they thought were going to show up.
Right.
And then in March, this is bigger yet, went from 236 to 165. So what is this trend that we're seeing? We're seeing fewer and fewer jobs. We're seeing revisions to job numbers they thought there were more, and now there's actually less. So that's kind of interesting. And then there's some other things that come in here. Like one of the things that I heard, and I wish I would have written it down from my stats here, but we're seeing that Gen Z, that generation, which is a great generation, they're actually waiting longer to get into the workforce. And
they're taking gap years and things of that nature, right?
Yeah. And that has huge implications on a whole bunch of things. We talked on other episodes about Social Security and insolvency. Well, you don't have people paying into Social Security, so that's going to speed that up. So there's some things that are definitely worrisome, debt ceilings, you know, all this other stuff that definitely could lead us into, push us over the cliff. And I think that's why I felt it was so important to make sure we talk about this stuff, because maybe it's not happening today. Maybe this will never happen. That would be ideal. I don't want to see this happen. I'd like to see the economy grow healthily. I'd like to see everything wonderful and great and everybody make a lot of money. That's what we want to see, right? That's awesome. That's perfect. But we do have to prepare for what potentially could happen and the potential downsides that exist out there. And we're just seeing more and more evidence coming in saying, hey, this economy is really slowing. Things are really starting to come to an end. Now, I was watching and they had the consumer price index numbers coming in for May, and it came in about where expected. Okay, fine. But what that tells us is that inflation really is still not under control. The Fed probably is not cutting rates anytime soon. And that might spell that the markets themselves are overinflated. And that could put us at risk. And that's why it goes back, I go back and I say, we really need to look at your risk, your ability to take risk. And one of the things I did for one of my clients recently, which I think was really a very smart move, is that with interest rates being as high as they are now, there are vehicles out there that we can take and put our money into and do what I call lateral move.
Okay.
So money that's in the market.
Right.
And maybe we didn't do too bad. Maybe we did okay and we're only down a little bit. And we can move it over into a new account that if the recession hits and the market goes down, we don't lose anything. If the market goes up, and I'm wrong, which I want to be wrong, okay?
Right.
The market goes up, well, you're going to make some good money. So for example, this is one couple I work with. The account we put it in, their money in, is that if the market is positive at all over the next 12 months, they're going to make 9%. So if the market's up 1/10 of 1%, they make 9%.
Wow.
If it's up 5%, they make 9%. If it's up 50%, they only make 9%. So that's
Right.
the trade-off.
The trade-off, sure.
Yep, they're
Yep.
not going to get the full-on upside.
Right.
So we're able to put them in a position that we can make a lateral move in the market where we're not getting, we're getting out of the market, but we're not putting ourselves in a position we can't still make a decent return. And these type of investment tools, we've been working with them for over 20 years. And I can tell you that I've seen a lot of these policies that have been around for a long time that have actually done very, very well. I did a review for a client and actually calculated the returns on her policies, and they ranged from about 5 to as much as a little over 8. And you think about that in the place that doesn't have market risk, and you're making that kind of interest on your money over that period of time, in a period where historically interest rates were very, very low.
Yep, and the market's been so volatile. And
yeah, they didn't have to worry about the volatility.
Right, yeah.
Like the worst thing that happens is you have a zero.
Right.
That's the worst thing that can happen.
But you don't lose what you have in there.
Right.
Yeah.
And it's not, this isn't necessarily something that's right for everybody.
For sure.
And that's why we do our plans. And we put together a written guide, if you will, or written recommendations and saying, for your situation, based upon who you are, your risks, and everything that's makes you you, we recommend doing these things. And that's the thing that I think really I have a lot of pride in, and everybody at our office has a lot of pride in, whether it's Victor or Michael or myself, where we want to make sure that we're doing things that are in your best interest. We're going to customize things that are just for you, and really for your best interest. And that's part of being a fiduciary, is that we want to make sure that we are taking that extra care to put ourselves in your shoes and say, what would I do for myself?
Right.
And knowing what I know, what kind of things, what kind of tools should we use to make sure that we get you where you want to go. And I think that's so critically important. And that's why, the book that I wrote, that I think it's great. I mean, it
is a great book.
I like the book from the standpoint, it takes some complicated subjects, boils them down. I throw in a couple of my stories so people can understand how does that relate to retirement. And if you want a copy of Retirement Be Prepared, you can just give us a call at 833-856-1392. Or of course, you can scan the QR code at the bottom of the screen. It'll take you to a little site. You can just say, hey, I want the book. I want to schedule a visit. Now, if you come in to see us, it's going to be free, complimentary. There are no strings attached. You can come in, sit down with us, get to know us, see if you even like us. Maybe you don't like me. I don't know. I work for my wife. She likes me. So hopefully you like me. Or Michael or Victor.
You're
Victor
a very likable guy. Your whole team is.
Victor is a great guy. My brother is amazing. We are so blessed to have such wonderful folks working for us. It's really incredible. But you know what? You don't really get a chance to know us until you get a chance to sit down with us.
Yeah, it has to be a good fit for both parties, right?
Absolutely.
Yeah.
And there's times where we're not necessarily a good fit for you, but you may not be a necessarily good fit for us. But we're still going to give you the very best advice we can no matter what.
Absolutely.
And that's our promise to you. So again, if you want to give us a call at 833-856-1392, request the book, request a sit-down visit with us, get to know us, see how we can help you by putting together that complimentary plan that's written with directions to give you an idea of the things that you need to do to make sure that you're ready for retirement and successful for retirement. And we'd love to see you. And we got popcorn and cookies and of course,
right?
the mugs.
Yes.
Which you can take home.
Awesome, Patrick. Thank you. To our viewers at home, we are going to take a quick commercial break, but we have a lot more to cover on the Elite Money Market Update. So stay tuned. We'll be back after this.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Welcome back to the Elite Money Market Update with Patrick Marcel, the CEO of Elite Retirement Group. There we go. It's a tongue twister at this point, right? I'm your host, Kristen Oakley, and we're talking a lot about preparing for retirement, specifically with today's economic climate, current issues happening in our world. I know you have your book, Be Prepared for Retirement, and one of the interesting things you were mentioning is some of the strategies that you're able to employ for clients, a place where they can put their money, where they can capture the gains of the market without having to suffer those losses. You and I both know what that investment vehicle is called, but for our viewers at home that might be new to that, do you mind just unpacking and explaining that a little bit more and what exactly it is and who might be a good candidate for that product?
Right. So it's called an index annuity. Some people call it some things different, hybrid annuity, some other stuff like that. I've heard it called a bunch of different stuff. It's really called an index annuity. And actually, the thing that's really interesting is that product itself, it's relatively new. And when we think about the world of annuities, a lot of times there's, the Ken Fishers out there that say, oh, annuities are terrible, you shouldn't have one. They were, for a while, were buying out surrender charges and stuff and, trying to tell you how bad they were. And I used to do a lot of seminars where folks would come in and we try to do some education and help them learn stuff. And I had a gentleman one time stand up and say, actually literally stood up in class and he's like—
Interrupted you?
Yep. And he said, I just want to let you know, the annuities, those are terrible. Nobody should ever buy one. And I'm like, okay. I said, that's an interesting concept. I said, I like to keep my reservations, set aside. I want my options open for my clients. And I just like to talk about how they work and what they can do. And they are not right for everybody.
Right. And there's different types of annuities.
Right.
That's the problem. People are so quick to throw the baby out with the bathwater. They hear the word annuity and they're like, oh, stay away. But to your point, there's different kinds and you're talking about a very specific type. Right.
And the thing that was really interesting is his follow-up remark was, he said, the best investment I ever made was my pension. And I said, so you know what a pension is, right? And he's like, well, it's this great investment that I didn't even have to put any money in and I'm getting money for the rest of my life. I said, yeah, that's an annuity. And then he sat down. And I wasn't trying to pick on him or anything, but I was just trying to make him help educate.
Right.
That, it's like, yeah, you may have heard a lot of negative things. And I always say there's times where there's bad application, right, of good products. And I think I've shared the story where when I was growing up, we had some times where Dad locked his keys in the trunk of the Grand Prix. We had to bust the lockout and use a butter knife to open it. Maybe not the best tool for the job.
And your mom was thrilled about the butter knife being in the car. Yes.
And there was always one behind the dashboard, so you had that whole thing going for you.
Right.
Yeah. So we look at that and we say, there's a lot of tools out there. And if somebody doesn't take the time to really learn about you and your situation, how can they possibly say everybody should have this or not have this or anything like that? I think we really need to judge for ourselves. Because every situation is different. But the index annuity, one thing that's I think really interesting is there's actually now quite a bit of data out there. If you're familiar with the Wharton School of Economics, which is a very prestigious college, they actually came out with a white paper about performance and how these index annuities have done over time. And really what an index annuity is designed for, it's not designed to beat the stock market. It's not. That's not what it's for. It's designed to actually give you a better interest rate than the things at the bank. That's really what it's for. And if you use it appropriately and you use it in a context that makes sense for the client, it can be a really wonderful thing. And when we've had these cruddy markets, right? It's been great knowing that my clients that have those products, they don't lose money.
Right.
You know, if you have a zero, you have a zero.
Right.
It's sure a lot better than going backwards.
And going backwards, having a negative. Well, and one of the things I think it's important to point out is because you are independent and because you are a fiduciary, you are not beholden to any one set of products. It's not like you're trying to push a certain product on people or anything like that. You're able to sit down with someone, look at their holistic picture and go, okay, based on your individual situation, this is in fact in your best interest, whereas for this person over here, it might be a completely different set of investment tools.
Yeah, and that's the thing I think that makes my job amazing is that it's a puzzle.
Yes.
And I need to sit down and figure it out. I have clients that don't have any annuities because it doesn't make any sense.
Right.
I have some clients that have several different types of annuities because it makes sense for them, but it's their situation. And being independent is fantastic because we have the opportunity to really look at all the options out there and say, hey, what really makes sense? And at the end of the day, what we want to do is we want to make sure that we're making recommendations that are best for you. And sometimes no change is the best thing to do. But you don't know if you need to make changes or not make changes unless you get a second opinion.
Absolutely.
That's why we offer the free complimentary plan. Okay, and if you don't want a plan, you just want to come on in and visit with us and get a second opinion, that's fantastic as well. We'll be more than happy to sit down with you, go over your situation, and provide you our recommendation and give you some feedback on where you're at, maybe some areas you can improve. And you know what, worst case scenario, we visit, you get to know me, I get to know you, we spend a little time together. Hey, that's all right. Maybe you get some fresh made cookies,
right?
Popcorn, you get a coffee mug to take with you. You can, of course, get my book if you want that as well. But those are things that, you know, what do you really have to lose to come in and get a second opinion? You can't have a second opinion, or you can't have a second opinion if you don't have a first opinion, right?
Exactly.
So the guy who gave you
the same person.
Right. That's exactly where I was going. Whoever gave you the first opinion can't give you a second opinion.
Right.
That's what they're there to do.
Well, and if someone's on track, you're going to encourage them to keep doing what they're doing, right?
Yep, absolutely. So all you have to do is give us a call at 833-856-1392, or of course scan that little code at the bottom of the screen and schedule time to visit with us. We'd love to see you.
Patrick, thank you so much. To our viewers at home, we hope you found the content valuable. That's our intention every single week. We appreciate you watching. Call the number to get your own complimentary portfolio analysis, 833-856-1392. We love you, Wisconsin. We'll see you next week.